what it's costing you to not have a 401k plan. 3 reasons.
Today, we're breaking down the 3 main costs of not having a retirement plan for you, for your business, and for your employees.
How it's costing you talent. How many employees have you lost because you didn't offer retirement benefits? All right. You don't know that. Okay, maybe that's not a fair question because you probably don't know because they probably didn't apply. All right.
But most employees do know that there's a difference between you give them the same amount of money, but you have a plan and you don't have a plan.
Right.
They know that is there a plan with a match? And then actually,
and what's the match formula?
And then sometimes,
and what's the vesting?
You can actually even look at your industry. There's studies on your industry and what's the normal compensation, and is a retirement plan part of that compensation?
Exactly. Right.
And given the state mandates, that almost makes everyone now.
You're right. More. I mean, California, it's down to 1. Illinois, it's 5. I need to memorize the other states' limits. Okay. But driving around in our town, small businesses, 15, 20 employees, they have on their marquee, when they're looking for help, it always says, we have a 401k plan. It doesn't say we've got a simple plan. It doesn't say we've got a SAP. It doesn't say we're in Illinois Secure Choice. We have not seen one employer advertise the fact they're in Illinois Secure Choice. That would be a first, okay? It is a differentiator, and perhaps, and I know my social media feed is the algorithm feeds me because of what industry I'm in, but there's more and more people out there telling everybody else to look at the employer that has the better match. Now then, the cost of acquiring talent is much less than the cost of sponsoring a retirement plan.
Well, certainly, like getting better employees, keeping them longer saves you money.
And then when you look at what an employer match costs versus finding somebody and retraining somebody to replace that person, you need to be looking
to try to keep them around too.
Correct. Right. Yeah. The funny thing is, employees are being told by other employees to look for firms with a match. They should be telling you to look for a firm with at least a 3% safe harbor, so you're going to get it whether you defer or not. Yes, I understand 3 is less than 4, okay, but that is an employer making a broader commitment to their employees' retirement than somebody just doing the match. All right.
Number two, it's costing you money.
It's costing you as the employer money. All right. So there are the big thing with qualified retirement plans is that they are a current expense for an employer. All right. The cost of the contributions to the staff, the cost of consulting, if you're paying for your financial advice and your record keeping out of pocket, those are all deductible expenses that you can spend towards your employees' retirement. Now then, we have many clients. Yes, you need a very certain demographic to have this. We have many clients where the cost of the contribution to the employees in order to get the tax deduction is much, 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 much less than what you're actually saving in taxes. So if you're saving $250,000 in taxes, but it's a $50,000 contribution to the rank and file, I didn't say we're not always talking about 401k plans. There's more things out there. All right. That seems to be a reasonable trade-off from an employer's point of view. And then, of course, what's one of your favorite components of Secure 2.0, dear?
The tax credits.
The tax credits. Okay, the tax credits. All right. You get, if you have employees, if you have rank and file employees, you get a tax credit for starting a plan. If you have employees making $100,000 in W-2 wages, you get a tax credit for making an employer contribution. And now you have to add automatic enrollment. And guess what? If you have employees, you get a tax credit for adding something you have to add. Okay.
And do you know what also we didn't actually say was, okay, so if you give somebody $1,000 bonus, right? They pay taxes on the bonus, and you pay taxes as an employer.
So $1,000 bonus costs you $1,076.50.
Right.
How much does $1,000 in the 401k plan cost you?
$1,000. And so then you can also too have a formula for your profit sharing plan where you say, I have $50,000 to give in profit sharing across all my employees or whatever set of them. It will be $50,000. But if you give it to them all in bonuses, you actually have to consider what you have to do in terms of payroll taxes on
Absolutely.
that.
We do forget about that.
So when you want control, there's some real good control, and
How is not having a 401k plan costing you as an employer about your own long-term growth? All right. Presumably, you're thinking about your future too. All right. A 401k plan is going, if you're born in 1975 or before, a 401k plan is going to let you put more money in than a SEP. It's going to let you put more money in than a simple. All right. If you have employees with the safe harbor match and the 3% safe harbor, you're able to put more away than you can with a SEP or with a simple. All right. Plus you've got the Roth options. There's no compensation limit for making a Roth contribution. All right. And then if you do have employees and you've got the right age demographics, we can leverage some rules to give you you can't discriminate, but you don't have to give everybody the same percentage. Okay. We can usually leverage an employer contribution for key employees and or owners.
So there's some great things you can do.
There's a lot of things that we can do. You're not going to get it when you're buying one of those fintech solutions where everything is from where you're doing all the work. No.
It's a little plastic baggie of 100 Legos, isn't it?
Yeah, and we have 1 billion.
But we build it for you.
But we'll do it for you, right?
Okay, so if you want to see how much you can save when starting a new 401k plan, check out our tax credit calculator with the link in the description.
Thank you very much for watching. Let everybody know. Let everybody know that you're watching us. All right, be really cool. Okay, like, subscribe, comment, please comment. Okay, and most importantly, don't forget to keep those cards and letters coming.
Thanks
Toodles.
for watching.